Yeah.
Come on in. Well, good morning, you guys. How's everybody doing? Here. Here, all right.
I don't want to.
Plenty early, isn't it?
It's too early.
You guys, we'll go ahead and get started? Okay, all right. It is entirely too early.
Oh, I've been up for 5 hours.
Oh, okay, well, it's not for you, all right.
No, it's still too early.
Okay.
Yeah.
All right.
There's
Okay.
like 45, but it's not 40.
Yeah, it is a long time. So, let's do this. Let's go ahead and get started. Now, Jeanette, we've got a great tutor. Jeanette Steinmuller is her name. So let me hand out her schedule. Here you are. Here you are. Now, I'm not counting these, so if your row is short, here you are. Here you go. Here you are. Sure. Now, what I just handed out was Jeanette's schedule. And now, let me turn this thing off. The Zoom quit working, and this is how you reset it. There we go. Here you are. Can I hand you this on the way by? Here you are. Okay. All right. So, here's Jeanette's schedule. And Monday, Tuesday, Wednesday, etc. In addition to that, there's student tutors, and these student tutors are great. Yeah, so they're great. Ethan's been there for quite a while, Carissa, Ryan's been there for a long time, so that they are really good. Now, one thing about it is, she's moved, and of course she's now over in AA4 106. And you guys know what AA4 is? It's exactly that way. Anybody not know? Okay, all right. So that's Jeanette. The other thing that I wanted to point out here is that we have these student success workshops. Now, I thought I was going to offer extra credit for attending these. The deal is they're all at noon, and so too many people simply couldn't attend, and so I can't, I just can't go that route. But my thinking on the whole thing is the fact that what it can do is it can, the way the life kind of works is you have opportunities. A lot of times they'll come out of nowhere. Can I give you one of these? Okay. A lot of times the opportunity will come out of nowhere, and then you got to be able to capitalize on it. So a couple of these would enhance your chance for an opportunity. So they have job search strategies, and they have networking, and then they have, in order to capitalize on it, they have resume building, interview skills. So these are at no cost to you. They're generally pretty good, and if you could get a job that would line up with your school, or more line up with where you want to go, you can easily move your career ahead 1, 2, maybe 3 years by the time you graduate. So let me just offer that.
Do you have extra copies of these?
Well, what I'll do is I've announced it to all the class, and I'll put it over here on the board.
Okay, good.
And so I'll put, here's the schedule, and then what I'll also put up there is more of an explanation. Okay? And so I'll just put those on the board, because I've announced it to all 3 classes. Yeah.
They've added a couple since
Oh, have they?
I work in the Career Center, so
Ah,
we've made those. So
okay.
they've added 2 or 3, like ones on credit scores,
Oh, wow.
how those impact your life, and I want to say they've added 2 since that one's come
Yeah.
out, so I would look for the
Yeah.
revised.
The thing is, if they send a revised, I'll post a revised.
They will.
Okay, sounds good. All right. Be sure to sign the roll when it comes around. All right. Now, let me get my checklist here. So we went over Jeanette. Talked about Jeanette. Now, Jeanette is such a wonderful resource. Let me get you one of these. Jeanette is such a wonderful resource that if you look her up, here you are. Thank you. So if you look her up, there's 5 bonus points. And she'll have the roster for you. And the cutoff is October 4th, and that's a week from tomorrow. So just look her up, she'll have her roster, sign the roster for this class, and the 5 bonus points, that's significant, because now all I'm going to do is add it to your total. But the effect is to increase one midterm grade, one midterm test, half a grade. So for instance, if you have an 80 on the test, 5 points will kick you up to an 85. It goes from a B minus to a B. So it's worth doing. And the only reason I'm doing it is she's such a fantastic resource that I want you to know where she's at. The other secret here is if you run your homework past her, she'll tell you if it's correct. And if it's not correct, she's somebody there to ask a question. So here you go. Let me give you one of these. So I would, this is the tutor. So I would be sure to, so run it past her, and that way you always get full credit on the homework. Okay? Yeah.
What if a time period we could go and she's not there, would we still get the bonus points for the student help? Or?
No, I want you to actually meet her. She'll have the roster. And my guess is the students that have it. That I can't guarantee. So, yeah. And by the way, I've got to make a note to myself to make sure that I tell her about the because we do it every quarter, I guess she must know, but it's always nice if email JS. Okay. All right, any other questions, comments? Okay. All right. Now, you guys, listen, be sure to show up on time. Because when you show up, when we're talking here, the door opens, everybody, you know what I mean? And then it takes us a while to get back to work. So be sure to show up on time. I live 81 miles away. I live in a farm in the middle of Washington State. I've lived there for 17 years. How many times have I been late in those 17 years? Never. So I can make an 81-mile drive and get here in time. Nobody matches it. All right. All right. What's that? What's that? Half, okay. Of course, I think yours is a little rougher because it's the gorge.
Up by Pastor Hill and stuff.
Up toward Chehalis, sure. Yeah, I live in the middle of, I live in rural Washington State. All right. So, and by the way, the homework for this chapter is deceptively simple, right? And later on, they get more difficult. If I were you guys and they gave me this homework, I would think it's a trick. And but it's not. It's just, this one is just simple. Now later on, they get more, they won't be simple, but yeah. Hey, by the way, you know, I for the longest time, I didn't say I live 81 miles away and I've never been late, because I thought the first time you say that, you're going to be late, and you'll be late 3 times in a row. Anyway, so far so good. And yeah, I've never been late, never missed a class. So anyway, but I thought maybe I should, just because but I'm sure reluctant.
You've never missed a class in 17 years?
Because of late. No, actually, and you know, they give us those 3 personal leave days that expire.
Mm-hmm.
I rarely take them, just because I inconvenience too many people.
Mm-hmm.
But if I miss a day, you know, well, in this case, it would be 35 to 70 people. Sometimes it's 100. So, but I rarely, yeah, but still. No, it's unusual for me to do that. And that's just not me, it's true of all of us that, you know,
Yeah.
I don't think it's true of all of us, none of us version you guys, how you doing? So are there any questions or anything? All right. Now, as far as the schedule goes, don't forget chapter 1 closes on Sunday at 11. So be sure to start the quizzes in time to finish. Don't forget you get 3 attempts at the chapter quiz. So if you're unhappy with your first score, restudy, take it again. Highest grade counts. Okay. Have the homework done before you take the homework quiz, but they all close at 11. So start plenty of time to have everything done at 11. Questions, comments? All right. Let's do this then. Let's go and get into the rest of chapter 1. Thank you. The rest of chapter 1. So let me put this over here. Oh, by the way, later on today, I'll ask if I can take your picture so I can learn everybody's name. Because it just goes so much better if you can call somebody by name than, like I would pay you. All right. All right, questions, comments? Okay, let's go ahead and get started. So now, don't forget, 201 and 202 are financial accounting. Okay, now what financial accounting does is report the roll. Hey, thanks. Anybody need the roll? Everybody got it? Okay, all right. Okay. All right, hi. There we are. Here's Jeanette. 5 bonus points if you sign in before Friday. Okay? All right. Oh, by the way, here you need to sign the roll too. Okay, here you are. And actually, your name is, what's your name? King, K-I-N-G. All right, there you go. All right. So, anyway, this is financial accounting, and in financial accounting, you report to someone, and by someone I mean the creditors or investors, how the business is doing. So 201, that's the class you're taking. And of course I could put ACCT ampersand, but okay. And 202, they're financial accounting. And they report how the business is doing, to the owners and the creditors. Okay? Now, how does it go? And now, by the way, 203 is managerial accounting. Managerial accounting is different. It reports, what it does is it deals with internal decision making. Would it be better to make product A or product B? And you'll enjoy it when you get there because it enables you to make decisions that at first blush seem dumb. But when they'll show you how to work out the math, and you can see what will be a good decision, which you otherwise will easily overlook. Okay, so that's what 203 will do. Now, how does it report this? Well, it has general purpose financial statements. And there's basically 4. There's the income statement. There's the statement of owner's equity. There's the balance sheet. And there's the statement of cash flows. Okay? So these are general purpose financial statements. Okay? And financial accounting is what we're talking about, and basically it reports. So, and these general purpose financial statements is how it reports to the creditors, to the owners. So when you do these, the person you have in mind, the audience you're primarily addressing, is the owner. Okay, and of course we call them investors, whatever. They're also, and the creditors second of all. Now they're used by a whole bunch of people. Management uses them to see how they're doing. The union does it to see how they can bargain. The taxes, tax authorities use it to see if you're paying your fair share of taxes. Okay, so but this is the primary person that's addressing. Second of all, this, although a whole bunch of people use it, internal as well as external. So let's start here with the income statement. So let me put up the general format. So the income statement. And this is the format. Now, there'll be a 3-line heading. So let me kind of preface this with the fact that what we're doing here are these are just the conventions of financial statements. Because everybody follows these conventions. Now, a convention is just an agreed on way of doing things, right? So, and the only reason, I need an eraser. All right? And the only reason many of us made it, thanks very much. The only reason many of us made it to school today, is that everybody followed the conventions. That when the light turned red, people stopped. When the light turned green, people went. Everybody drove on the right-hand side of the road. Okay, if you drive on the left-hand side of the road, it creates problems. All right, try not to do that. And again, they're just conventions. And these conventions are followed so rigorously that you can go anywhere in the United States and feel confident that you're reading these financial statements correctly, because all the conventions are just followed. Okay? So, I'm going to make this more legible. I saw a quizzical look up here. What's that say? So it's a 3-line heading. It'll have the name of the business, the name of the financial statement, and the dates. Now, this is the 3-line heading, and all of them have it. So, the name of the business, in this case, it'll be an income statement. That's the name of the financial statement. And for an income statement, the dates will cover a period of time. In other words, last month, last year, last quarter, last some period of time, I made this much money. Now, the other statements like the balance sheet are at a point in time. And we'll show you that when we get to it, but this will cover a period of time. Basically, the format is revenue minus expense equals net income. Okay? So, revenue minus expense equals net income. Let me put up an example. And I'll put up an example. Okay. Now, this thing will take a beat up. So, let me put up some of the more conventions. A single line means you add or subtract. Okay, and I'll show you where that comes into play. A double line goes on the bottom line. Okay? You itemize, and I'll show you an example, in the left column, and you total in the right column. And by the way, this is a little bit low, so maybe you guys at the far end may have to stand up to read this. The reason I'm doing it is because if I leave it on the board, at the end we have a review, and I think that last review moves it and makes it more memorable, makes it easier to remember. So I'll leave this up here, so you may need to stand up to read it. So the double line is the bottom line, itemize in the left column, total in the right column. Okay? All right. Now, while we're waiting for that thing to boot up, let's go on to the next one, and I'll show you an example of each. Now what you do is, don't forget, the owner, as we mentioned before, works for nothing, right? The owner takes out capital. So the owner is really concerned about how that capital is accumulating in the business, okay? So that's reported on the statement of owner's equity. Now, here's how it works. I'm going to see if this is darker. That's gotten pretty light. So the statement of owner's equity. Here's, again, you'll have a 3-line heading. And one way to remember this is who, what, and when. Who, the name of the business, what, the name of the financial statement, and when the date. So who, what, and when is a mnemonic device to remember how that fits together. So you again have a 3-line heading. Now you start out with the beginning capital. You add what increases the capital, subtract what decreases the capital, and then you have the ending capital. Okay? So, I'm going to move this thing along a little bit. Okay, so what, if you remember back to last class, what sort of things increase the capital account? Well, an investment does. And revenue does. Okay, those are the increases. What are the decreases? Well, the decreases are a withdrawal and a net loss, or a net loss. Okay, so, and then often in here, you'll have a subtotal. Okay, so, and in accounting, increases go first, decreases go second. And the reason you do that is because if you have a negative subtotal, it's a good source of confusion. So increases first, decreases second. Again, same conventions. There's a single line, add or subtract, double line that goes at the bottom, itemize on the left, total on the right. So let's kind of go back. Let's take a look at an income statement. Okay? So, let me go down here. Let's see if I can recognize it in the thumbnail. This has got to be it, right? It is. All right, slideshow from current slide. Okay? So, here's the income statement. Now notice what happens here is the fact that, how many lines are in the heading? 3. The top is the name of the business, it's fast forward. Okay? So here's the 3-line heading, name of the business, name of the financial statement, and the month and the dates. Now in this case, because it's an income statement, it'll cover a period of time. In this case, it's the month of December. Sometimes you see this December 1 through December 31st. Okay? I'm going to turn this around. And by the way, I'll post this to, there's already YouTube videos on, Moodle, and I'll post this in addition to that so you have both. Could you reach up and turn that so it opens, and maybe the same in that window? And just turn that thing so it opens. Thanks. Okay. And we'll make this more readable. Okay. All right. So what happens here then is 3-line heading, who, what, and when. And here you have revenue. And what it is this particular business has 2 types of revenue. It has a consulting revenue. The total revenue in the month, there were 2 transactions, totaled $5,800. They rented stuff out, that's a sort of the second source of revenue, total of 300. One line means you either add or subtract. In this case, it meant you added, so you added the two together and you got this total revenues, okay? That's what I meant by a subtotal over here. Then expenses, you have rent expense, salaries expense, single line because you're gonna add them together. Here's the total line. Now, these two single lines meant you add. This one means you subtract. So you take the expenses from the revenue to get the net income. The net income is the bottom line gets a double line. Now, dollar signs go at the top of each column and the bottom line, everything's got a label. Now, you again, notice that there's two columns here. You itemize, list, whatever you want to call it, in the left column and put the total in the right. If there was one source of revenue, it would just go over there, go over to where the totals go. All right, you guys doing good? Any questions, comments? All right, let's do this. Now, be sure to bring your book to every class, okay? And the things, I'll put it on the board, but it's a lot easier to work with if it's in front of you. All right, so let's do this to move it along. So let's do exercise 14. You'll find that on page 35, okay? So here's how it reads. All right, exercise 14. Now don't forget, on the odd number pages, they put the labels on the right-hand side. Sometimes you don't think to look for them. So here's exercise 14. Right here. I usually write it on the board, page 35. Okay. All right. So, what it says now is, on October 1st, Natalie King organized Real Solutions, a new consulting firm. On October 31st, the company records show the following items and amounts. Use this information to prepare the October income statement for the business. So, what two kinds of accounts go on the income statement? Revenue and expenses, right? Well, cash is an asset, accounts receivable is an asset, they won't be used on. All right, okay. Consulting fees earned, there's the revenue. And then it has rent expense, salaries expense, telephone expense, and miscellaneous expense. So listen, why don't I do this? Let me put this up so you have an example to follow. And then I'll put up the answers in a second. Everybody has a chance to practice. And I think you can learn it a lot easier if we have a presentation, I explain it, and you guys do it. I think that's how you learn something. Okay? Now, how's everybody doing? So always bring your book because it's easier to work with than when I put it on the board here. Feel free to look at your neighbors if you don't have the book with you. Yeah.
This is the problem set or the paper
Okay.
from the homework assignment. Is this what is supposed to be?
Exactly.
Or something like this? In a format like that?
Yep, exactly. And by the way, for some reason, in this chapter, they made these ridiculously simple. So if I were you, I'd think this is a trick.
Yeah, it does seem a little deceptive.
Yeah, so it's not a trick.
Okay.
Now, later on, it will get more complex and pretty soon. And then they will do tricks.
Oh,
This is
well,
just
that's-
not one of them. By tricks, I mean they'll throw in things that have a subtlety to them that you need to think about.
Oh.
I didn't mean tricky, it sounds like they try to pull a sneak on you, but no. But there's no subtleties here, okay? Ready for some answers? Everybody got the roll, right? Okay. All right. So let's put up the answers, see what questions there are. So did you guys remember to put in a 3-line heading? Who, what, and when? And the date for an income statement will cover a period of time. Now, you have revenues minus expenses equals net income. Now, there's only one consulting fee, so it just goes where the total goes. There's 4 expenses, so they're itemized here, total here. This line means you add. Here's the total expenses. This line means you subtract. And the bottom line is a double line, and everything's got a label. Sound good? All right, yeah.
You always itemize them in monetary order?
Actually, the way this works is, of course, here's the answer to your question. Let me give you a good one here. What you do is, however you do it the first time, you got to do it the same way the second time, so the two are comparable. You put them side by side and see how they change. Okay, now there'll be some variation, because as the business grows, you have to add counts and all that sort of thing, okay? Now, in terms of what order they're in, sometimes the order is set, and we'll get into that when we get to the balance sheet. Other times it's not. So you'll see them in order of size, or you'll see them alphabetically. But for expenses and revenue, there's really no set order. There are just ways people do it. Now, that's a really good question, because later on, when we get into the balance sheet, there are specific orders. There is a specific order that really facilitates reading the financial statements. But in answer to this, you can choose, any way you want on this thing, but you got to do whatever you do the first time, you got to repeat it the second time. Okay? Any questions on anything? Doing good? All right. Let's get on to the next one. So let's just have a real quick review. So what you want to do next is, you do,
So why aren't like office supplies and equipment and stuff?
because they're an asset.
Okay.
Yeah, and what they'll do is now they'll go to the balance sheet, right? So on the income statement, so the income statement is considered a measure of efficiency. What it says is how well did the management spend money on these expenses to generate the corresponding revenue. That's what that's what this answers. Now, assets will go to the balance sheet. We'll get to that in just a minute. Okay, and that addresses a different question. It often we're concerned with the measure of health. Okay, any other questions? All right, often, along those lines, what often people want to put on this is the accounts receivable, but it's an asset. That's one error that people make along those lines. Okay? All right, so again, now we have the statement of owner's equity. Again, a 3-line heading. Now you start out with the beginning capital. In this particular business, it's a brand new business, so the beginning capital is 0. Then you add the investment. In this case, the investment is 70, oh here, let me do this. Then you add the investment. Now, in this case, yeah, let's do the review. So then you add the investment. So what you do is you have the beginning capital, and you're going to calculate the ending capital. You put the increases first, the decreases second. The two things that will increase the capital is investments and net income. So in this case, because it's a brand new business, the beginning capital is 0. Here's the investment, okay? Here's the net income. Now where do you get the net income? Income statement, exactly. Okay, if there was a net loss, it would go down here, and it would also come from the income statement. Okay? Then this line means you add, okay? And then, in this case, and then what you do is you add the total to get the subtotal, okay? The total revenue, or the total increases, the beginning capital, get a subtotal. There's only one decrease. If you got a net income, you won't have a net loss. If there was a net loss, it would come down there. Then this line means you subtracted. This is the bottom line. It's got a double line. So the capital account changed from 0 to 34,200 over the month. And again, it covers a period of time because there was an investment, a net income, and a withdrawal. That sound good? All right. So let's move it into long-term memory, and let's go ahead and do exercise 16, or 15, I guess. It's the next one down. I'll put this example up here for you. Here's the problem. So it takes the same information, and now it does the statement of owner's equity. So here's the investment. The beginning capital is 0 because it's a brand new business. They have the withdrawal in here. The net income, of course, comes from the income statement. I'll make that more readable. Now let me try this. That makes everything more readable, but is it too dark to work? Okay. Guys, I kind of got a call in the middle. Looks like some people are ready for the answers. Let me put them up. So here is the income statement. Let me include it because it'll be good to see how this whole thing fits together. This is the one we just did. Now this is the statement of owner's equity. All right. Let me give you a minute to look that over, and then we'll see what questions there are, and we'll maybe discuss it. Okay. So here's the way it works is, here's the beginning capital, here are the changes, here's the ending capital. The beginning capital is 0 because it's a brand new business. The two things that will increase, and increases always go first, are an investment and a net income. So here they tell you what the investment was, it was $74,000. The net income comes from the income statement. Here's the subtotal, here's a single line, then you add the two together. Then you put the decreases. There's only one decrease, withdrawals. Since there was a net income, there won't be a net loss. Then you subtract this line, single line meant you subtract. This is the bottom line. It gets the bottom line gets a double line. Everything's clearly labeled. Capital October 1st, capital October 31st. And then the top of the column and the bottom line get a dollar sign. Sound good? And again, what it is the owner is seeing how capital's accumulating in the business, because this is where the owner, this is why the owner does it. Okay? Sound good? All right. Let's, yeah.
Didn't we always write the plus and the less, or the add and the less symbol?
Yeah,
Okay.
you often do.
Okay.
Yeah. Yeah. Yeah.
I have a quick question. In the exhibit one, on the fast forward one, you have a dollar sign after the investment. That,
All right, so that would have been this, so let me just kind of, so that, what are it, let's take a look here. It's the top of the column. Dollar signs go at the top of every column. Mhm. Yeah.
So how can in fast forward they do the addition in the left column?
And by the way, you can do it in either.
Okay.
Yep, and by the way, it's your choice. So when you do these things, it's the same rules as before. The question you say is, how can I present the material so it's the easiest to understand, so it's the most clear, less ambiguous? This is probably the better way of doing it, okay? Yeah, it's the better way. By the way, let me point out something else too. The red normally means there's a net loss. You know, like, and in the old days, what they would do is they take out a separate pen and actually write it red ink. If you do it in QuickBooks and there's a net loss, it'll print the net loss in red, okay? Now, the textbook's trying to do here is just make, it's pointed out, make it leap off the page. But I wish you would have done it green or something, because the red does have a meaning. All right, and same here, there's, all right. Okay, all right, any other questions? Doing good? All right. So let me turn on the light here. Let's go over the next financial statement. Now, the next financial statement will be the balance sheet. I'm going to turn this camera around, and we'll see how this camera thing works. Hopefully it'll be worth doing. All right. So now we're going into the balance sheet. And of course, the balance sheet, again, a 3-line heading, what and when. Now, the balance sheet is just like the fundamental accounting equation. You guys remember the fundamental accounting equation? Assets equals liabilities plus owner's equity. Well, in this case, you put the assets on one side, on one side, And on the other side, you put the liabilities. And you put the owner's equity. Then, total assets equals total liability and owner's equity. Okay? So this is the general format. This is just the scheme of things. Okay? 3-line heading. So assets on one side, liability and owner's equity on the other, then the total assets will equal the total liabilities and owner's equity. Okay? Here's what one looks like. Okay? So, what we have here is we have a 3-line heading, who, what, and when. Put that there. A 3-line heading, who, what, and when. Okay? So we have a 3-line heading. Okay. We have a date. Now, this date, notice that this date is different. This date is a specific date, right? So sometimes this is called like a snapshot of the business at a point in time. So on December 31st, they have $4,800 worth of cash in the business. Now, on December 30th, let's face it, they probably had a different number. Because we're talking about, in many cases, when we say cash, we're talking about the checking account. So in checks are, there's a bunch of them. So the previous day, they probably had a different number. January 1st, they'll have a different number yet. But this is what they had on December 31st. Here's the supplies, here's the equipment, these are all the assets. Here's the total assets. What does a single line mean? It means you add. And in this case, notice there's 2 bottom lines. So there's 2 double-line numbers. And notice that the total assets equals the total liabilities plus owner's equity. There's 1 liability, so there's no 2 columns about it there. Now, where did the C. Taylor Capital come from? Right, statement of owner's equity. So it came off the statement of owner's equity. Now, in a minute, I'll show you why. It will save you all kinds of work. If you do the income statement first, the statement of owner's equity the second, and the balance sheet third. It just really saves you a lot of work, and I'll show you why in a minute. Okay? And the answer is you carry forward a bunch of totals, and you don't have to rewrite the numbers that went into the totals. Okay, all right, you guys doing good? Then let's do some practice on this. So in this case, let's go on to exercise 16. And again, exercise 16 will ask you to take the same